quarterly shift. On the quarterly shift, that's picked it up. I got that from ICT. Back in the day, he was talking about the quarterly shift on some of his videos. I think he talked about it in the core content too, if I'm not mistaken. But I've heard him talk about the quarterly shift before. But on the quarterly shift, every 3 to 4 months or so, we get the quarterly shift. And I heard him talk about the other day. He was calling it Dow theory. I've heard people talk about Dow theory before, but I never knew what it was. But what it is you just look at divergence between all three indexes, because as we all know, the ES, I'm gonna put them on the chart to get the ES, the S&P 500, the NASDAQ or YM, or NQ, the NASDAQ or NQ, and the Dow or YM, right? They generally move in tandem, right? And they're correlated, right? They're correlated, they move in tandem. Well, Tim, what does that mean? You're using these big words on me, right? So correlated, moving in tandem. The simplest way to put it or understand it is when one goes up, the other one goes up. If one makes a higher high, the other one makes a higher high. If one goes down, the other one goes down. If one makes a lower low, the other one makes a lower low, right? They are correlated. Inversely correlated would be like the dollar and the ES. Whereas if the dollar go up, the ES typically will go down. If the dollar make a higher high, the ES typically will make a lower low. And the opposite, they're inversely correlated, right? So when you got three indexes like the ES, the SP 500, the NASDAQ, and the Dow, they are correlated. So coming from the June low, right? The June low, right? When we came from the June low, we came, and then in October, the beginning of October, we took out the June low on all three indexes, right? We took out the June low in October, the beginning of October, on all three indexes, right? We're talking about the quarterly shift, right? So coming from August, dropped down in October, and all three took out the June low. So coming from June to August, we went up, and then as we came down, all three was making lower lows. You see all three of them coming down, making lower lows together. Everybody coming down together in unison, making lower lows until we took out the June low, right? The ES and the Dow, they went a little bit lower below the lows than the NQ did, right? You see the NQ line is not as steep as the Dow or as the ES, but they all ran, right? Then notice what happened here from the 3rd to the 13th, right? From the 3rd to the 13th, let's get us a solid line, right? The ES, we're going to get us a solid line now. And we're going to change the color. Might fatten it up a little bit so y'all can see it better, right? We're going to change the color. The ES made lower lows coming from the 3rd to the 13th. The NQ coming from the 3rd to the 13th made lower lows. The Dow coming from the 3rd to the 13th made higher lows, right? That is called bullish divergence or SMT divergence. ICT call it SMT divergence. It's bullish divergence because the Dow is showing a shift bullish. It's refusing to take out and make lower lows after we have just ran sell side, right? Over this quarter right here. right? June, July, August, September. Oh, that's 3 to 4 months. We're going to have a quarterly shift, right? So from the June low, which is toward the end of June, on June, the 22nd, all the way over to, right, like September, October, we took out that low. They go a quarter, 3 or 4 months, right? Took out that low, and then we got bullish divergence. So over 3 to 4 months, the market gonna tip its hat saying, hey, I'm fun to go another direction. I may take off and go forever. I may just start moving for a little while. Who knows how long, right? When does the shift kick in? You got to wait for the market to show you when it's ready to go. But in this case, once we got our quarterly shift, we got the quarterly shift, the divergence, the Dow took off immediately. Bang! Came up, came all the way back, and by the time it got there in December, we end up taking out the August high, right? We actually took out August high at the end of November, right? Took out the August high, right? So now fast forward to January. Now that shift was in October. Mid-October, we got our quarterly shift, and then the Dow took off. November, December, January, right? January, we're now in February, 3 to 4 months, right? Let's look in here. 3 to 4 months later, right? So looking at January, we've come up. Now the Dow took out August highs, right? The NQ and the ES, right? They have finally struggled their way back up to the ES came up here wick for wick with the September high, right? With the September high, came up there wick for wick with it on the September high. The NQ came all the way back close to the September high, didn't quite get it, got close to the September high, took out the December high though. Both of them took out the December high. And since January 16th, right? No, that's February 2nd. January 16th, right there, the ES has been making higher highs. January 16th, close enough for government work around this time. Middle of January, higher highs. Hey, why did that come out black? Why did it come out different? Hey, what's going on with you? All right. Higher highs, lower highs, right? We're making higher highs, lower highs, even if you come over here to the date, but we're making higher highs, right? And when we got to the beginning of February, right? The ES and the NQ has started to turn down, right? We had the right here. This was our, let's go to the beginning of February right there. Boom, we're going to stop at it. Yeah, that's why I stopped that anyway. At the beginning of February. So right there, boom, from the middle of January to the beginning of February, right there. And that's what? October, November, December, January, and toward the end of January. So 3 to 4 months. That's another quarter, right? Now we have bearish divergence on the Dow. This is what I've been watching. Is this the end? Is it time for us to pull back? Right? So since the beginning of February, the NQ and the ES have started to show weakness. They have started making lower highs along with the Dow. They have all started to make lower highs. All of them working together, making lower highs. Is this the end? Doesn't mean we're going to fall forever. I don't know. That's when you look at the weaker link, the stronger link, and the one in the middle, and you go in and start inspecting what do we have to the downside to attack, right? The Dow has on the daily 0 discount PD arrays to discount imbalances. There are none on the daily, right? There are none. You got to come a long way back to find some discount imbalances on the Dow, all the way back to October, right? So that's a nice little drippity drop for the Dow if the Dow will go back and attack any imbalances at this point in time, right? At this point in time, the NQ, it has 1, 2, 3. That's a little. It's got 3 imbalances going back to January that it can vary. We're inside one right now. We're at an imbalance right now where we just came to an order block, right? So we just came to an order block and we're inside of an imbalance right now. Will this order block do its job and push us back up to attack this September high that the ES took out before dropping? Or is this the beginning of the drop? That's why you're inspecting the PD arrays. Is this the quarterly shift? The market has not given me that sign. Why hasn't it given me that sign? We haven't had any heavy distribution to the downside with an imbalance to come back up to sell off of. That's what I'm looking for my tipping of the hand of, hey, I'm ready to go down. I see no daily heavy distribution down with an imbalance, with a bearish imbalance above it. Haven't seen that yet, but I'm watching the bearish divergence, right? The bearish divergence has seemed to start to take a hold. But in order for the market to shift to a bearish sentiment, we got a long way to go and plenty of time to get there, right? Why do you say that, Tim? I'm gonna hide these other ones because I don't need them right now, right? Just looking at the ES. Just looking at the ES. Come over here, right? If we come from the beginning of the bull rally, if we come from the beginning of the bull rally, right, with our Fibonacci's, right? If we get our Fibonacci's and run them from the low, right, to the highest point of the bull rally, right? If you notice, let me get this together because it's still set on what I had just set it on. Let me go to TLR default and I'm gonna turn on my OTE stuff. We can come all the way down to 36.75.75 and still be within a ICT OTE entry from the bottom of the bull rally, right? From the bottom of the bull rally. Will we do that? I doubt it. The reason why I say I doubt it, if we got back down here this time, that would be like, all bets are off. Why am I saying that? Because of this right here. Give me an arrow, somebody, please. Right? Turn this off. You see over here on December the, turn off. You see over here on December the 22nd right there. What do? We came down to an OTE entry, right? Well, now forget that because we didn't have that high yet. Let's go back over here to that time frame right there. Now, to that time frame, we came down to pretty much an OTE entry right there. Close enough for government work, right? We came down to pretty much an OTE entry. It didn't really hit it, but you know what I'm saying? On daily candles, that's very close. That's close enough for government work on daily candles, right? That's close enough for government work, right? So since we already went down to that OTE, in order to come back down to an OTE again, what is that going to do? That's going to take out sell side liquidity, right? That will take out sell side liquidity on a price run, right here. Give me an arrow. Turn off. On a price run. Come on, arrow. Right? On a price run, that took out buy side liquidity. Okay, so right. So in order for it, even though you can come all the way back down there, that would be technically an OTE entry on there. Not saying it can't happen, but for me, since this price leg came up and took out the buy side liquidity resting there, right? After such a strong reaction there, it came up, took out that buy side. If price, and then we set equal highs up here. Don't forget about these equal highs that we set, right? We set these equal highs right up here, right? We set them equal highs. If price decides to leave these equal highs and these imbalances up here and comes back down and takes out this sell side, that's saying a lot because this price leg took out buy side liquidity. So if we come down and deliver to this sell side liquidity, that's giving us a break in market structure back to the downside, right? And once we get all the way down here, what's the path of least resistance to the liquidity? That low right there, right? So if we get down here and break this sell side right there at 37.8850, eyes are on this low, this October low. If all these PD arrays, this order block here, this order block here, this order block here, if all of those bullish PD arrays support price, eyes on the buy side liquidity resting above 4207. And that's my take on the quarterly shift. I'm looking for the quarterly shift. The highs are starting to get lower on all three indices together, right? They're starting to get lower on all three indices together. Right? They starting to get lower. We got the bearish divergence from January to February, the middle of January to the beginning of February. Now the highs are starting to get lower, right? We got a couple areas of last line of defense on the NQ and the ES. The Dow has no imbalances below price. until you get all the way back to October area back there. So there's no last line of defense. It's just if we hit this sell side and don't bounce, look out below until you get down here to this October imbalances. If the imbalance, if the discount PD arrays fail on the NQ and the ES, you know, look out below. We talked about this yesterday. What has been leading the rally? Tech has been leading the rally, right? Since tech has been leading the rally, the Dow that ran up for a whole quarter got the opportunity to take a break. So if you look at the Dow has been taking a break. Money has been coming out of the Dow, right? All of the Dow we saw from over the last month at least, 19 stocks in the Dow are down. The Dow only got 30 stocks, and they've been rotating into tech. Tech been leading the charge, right? Tech has been leading the charge, right? Since January. Tech has been leading the charge. So now, if tech starts to take a break, right, and they start rotating back into the Dow can very well pop, right? The Dow can pop because the Dow has been taking a break. If tech takes a break and the rest of the Dow continues to take a break, then the quarterly shift can very well take a hold and pull us down for a while. How long will we go down? I don't know. But that's everything that I'll be looking at for the quarterly shift. I know I talked forever on that, but hopefully, you know what I'm saying, I was able to shed light on how Lil Timmy Rogers look at the quarterly shift. And hopefully I was able to answer your question, Father Legend, since you couldn't pull up because you was at work. You was at your book of Job.